This week's Freakout. Friday features $46 silver as the freak. While we investigate, let's discuss what transpired and why this rally has now become explosive. Yes, we are currently experiencing a tremendous rise with price fluctuations that are expected to surpass $1, at least once a day, it appears. In fact, silver was up more than 3% today, so it appears that we are seeing similar movements. Here are the current figures. It was within 32 cents of $47. Amazing earlier today, then it pulled back a bit. Today, the market for these precious metals is booming. There has been a small increase in the price of gold. The price has increased by $15.90, bringing it to $3,766.00 Gold has had an incredible ride, but things are beginning to level out here. Silver, on the other hand, has a lot more room to grow. Yes, I understand. Just moments before the markets close, it does so with a gain of more than 2%, or 2.06%, increasing from 93 cents to 46 cents. Today, there is some resistance, so it is pulled back a bit. That will be covered later on in the video by myself. The bid price is still about $46, however, so we can still rejoice over the good performance of palladium and platinum. Actually, platinum is up nearly $50 today. You may recall that I spoke about platinum earlier today. I'll include a link to that video on the screen at the bottom of this piece. You probably didn't see the video, right? Don't miss out on this opportunity. Platinum is about to hit $1,600 per day. Therefore, we should start paying attention to it immediately. A price of $1,000 was within $80. At the moment, platinum is trading at $1,582, an increase of 3.22%. Additionally, platinum has gained about 2% today. I still think it would be wise to narrow it somewhat more, given the recovery, even though the gold to silver ratio has shrunk even further to 81.76, which is getting close to the 2-year normal of roughly 80 to 1. What we're witnessing now is, without a doubt, a highly explosive one, and just a few days or a week ago, it was a suit. Time and the rapid pace of events make it difficult to discern when anything has occurred. For example, we witnessed a very significant decline for one day, but it swiftly rebounded, just as I had anticipated. Nonetheless, I believe we may witness a couple more of those. The main bull run for silver will continue though, so those will merely be bumps. Believe me when I say this. It's here, and it's only going to get bigger from here on out. I will be citing a story from Kitco because it is somewhat uncommon. But then again, we do live in unusual times. Before I go into that, I'd like to give a little shout out to Summit Metals, a channel sponsor, since it deals with some of the figures that were revealed today. Both the channel and many of you who have used their excellent customer care have considered them friends. Summit Metals can help you amass money right now. As a result of these crucial inflation statistics, gold prices have been rising recently, and today we witnessed a small increase in these prices. The recently published USPCEPI came up exactly as predicted, jumping 0.3% from one month to the next. After a 0.2% increase in July, the core PCE, excluding food and energy, was up 0.2%, which was in line with predictions but lower than the 0.3% increases in the 2 months prior to this year's headline. Inflation for personal consumption expenditures increased 2.7%, matching the previous figure from July and marking the highest level in 6 months. Market forecasts were borne out by core PCE inflation of 2.9%, which was higher than the Federal Reserve's target inflation rate of 2%. However, these figures are consistent with those of the Federal Reserve. That is a key point to keep in mind, since it will influence the Federal Reserve's actions in several ways. The result is a little decline in the dollar index. The market remains unchanged in light of the Federal Reserve's decisions at the next two meetings, despite a 3.5% drop to 98.15. What this means is that there is an 89.8% probability of another rate cut. Rate reduction, likelihood. Earlier in the day, I checked that number, and it has since altered. Put simply, this further supports the notion that rate cuts will occur in October and December, with the percentage also increasing somewhat to 66%, compared to 31.3% who think the Fed will hold off on cutting interest rates until that meeting. The odds of two more rate cuts are increasing, which bodes well for the economy. Meanwhile, the precious metal markets are responding positively to the easing policies. For example, silver is up today. Once again. As of late trade, it has increased by 2.12%, or more than 2%, to $46.19. The large volume that silver experienced earlier in the day has now given way to some resistance. The level was really high, bringing silver's price up to its all-time high of $46.68 today. The dollar index, as previously said, is also exhibiting improvements. However, in contrast to the optimistic US GDP report, it has reached a 4-week high. Surpassing market expectations that was discussed here are the many facets of the economy. While the GDP numbers are encouraging, other indicators are falling behind, which is affecting the market. Traders are re-evaluating the Federal Reserve's intention to cut interest rates in light of the GDP report and other recent US data. I've already covered some of these points, so you can see where things stand. Additionally, there are a number of facts and factors that we're considering regarding the US central bank's strong and consistent purchases of gold, which is keeping the price of gold high, backing silver. In this case, it is encouraging to note that silver is now outperforming, as it was predicted. Remember that silver's all-time high was $50 per ounce, and that even after accounting for inflation, it's only $46 away from $50. In the big picture, though, there's still a lot more that could happen that would push the metal up to that price, and many of us think it's about time that it moves. So, it's interesting right now. The positive economic data from last week, along with the Federal Reserve's current predicament, could put a damper on precious metals prices, according to senior market analyst David Morrison of Trade Nation. Morrison also predicted that President Trump will continue to level personal attacks at Fed Chair Janet Yellen and other colleagues in the run-up to the next two monetary policy meetings. According to him, the US economy is doing well enough that the Fed may opt to be independent and make just one more rate cut this year. This is why there are mixed predictions for the next meeting on December 10th. But the odds of another cut are almost 2-1, and more than 2-1. Therefore, I believe that is a really simplistic viewpoint, and it is being largely disregarded in this context. Next week, what are we going to watch? Next week, some crucial figures will be released. We can use that to shed light on what's to come. They go over some of the most fundamental technical details, such why the $46.50 mark is going to be difficult to shatter. US pending home sales will be released on Monday, followed by the US JOLTS job openings on Tuesday. Following that, we have the US Consumer Confidence Index. Following the ISM Manufacturing PMI on Wednesday, we will see the US ADP non-farm payrolls on Thursday, which is considered by some to be a more reliable indicator than the one we receive from the Bureau of Labor Statistics. We'll wait until Friday to view the US weekly jobless claims figures, then non-farm payrolls in the US, and ISM Services PMI will be obtained. Accordingly, the Federal Reserve's actions will be influenced by and affected by those factors. A stable dollar and jobs and the maintenance of those jobs are their two main missions. Let's watch how that turns out. The dollar is losing purchasing power, inflation is still a problem, and there are valid reasons to hold off on rate cuts until inflation returns to 2%. Among other causes, including geopolitics, the fact that it is presently above that level is one of the numerous reasons why the price of silver has risen. Truthfully, news has broken that Pete Hegseth, head of the Department of War, has summoned all of his generals and admirals to reconvene. Although the White House is playing down the call's significance, many believe it portends something major in the near future. Geopolitics is already heated, with the situation in Ukraine showing no signs of abating, no indication of a deal or discussion of any kind. Actually, Trump has been more belligerent in several of his remarks on the subject. Which one might spark a more widespread war? So yet nothing has changed in Gaza. Even while word has gotten out that a deal could be in the works there. Let's watch how that turns out. And there are other parts of the globe that are still worrying. For example, Taiwan isn't in the news much today, but could it still be a factor? China has continued to be really daring in that regard, and I have no idea. Now we'll observe the technical side of things to see how that turns out. The next area of resistance is around $54.50, which is a significant amount. Because to its relocation, I am unsure of how much has changed today. However, I believe that this contributed to the significant retreat that we witnessed. Even if the volume has dropped from $46.68 earlier, some individuals are selling, and trading throughout the day has led to profit taking, which is why it was kind of sucked down a bit. So that's worth keeping an eye on. What this means is that getting to 47 and then 48 can be challenging. We'll have to wait and see, but it might just smash through it once more. It all comes down to the mental and emotional state of market participants, particularly those who have invested in large bullion banks and their actions. I'm not yet prepared to declare that we won't encounter opposition here as we go ahead. At $50 an ounce, everything is up in the air. Still, I'm cautiously hopeful, and I find it fascinating that silver is making moves we haven't seen in 14 years. To go higher, it needs to break through the 50 mark, which it hasn't done in 14 years. That would put us back to 1980, by the way, and when you factor in inflation, folks, we still have a ways to go with silver, but encouraging developments are great confirmation for us stackers. Just remember that silver's value is more important than its price when it comes to justifying keeping on to it. In accordance with the Constitution and the Bible, namely Article 1, Section 10, we are guided by history, which is why silver is necessary for validating silver holdings. That concludes it. Please share your comments on today's market situation, and if you found this video helpful, insightful, or instructional. We sincerely appreciate you watching and invite you to subscribe, like, and comment. This was transcribed using turboscribe.ai. Remove this message by subscribing to Unlimited.